And thank you to our viewers once again. Unfortunately, that this market is not really giving you any reasons to celebrate, but celebrate we will. Today. But let's continue the party. We have Atul Suri from Marathon Trends PMS joining in on the show right now. Atul, good morning. Good to see you in person.
Yes, I know. It's so nice to meet both of you.
Refreshing.
Yes, after 2 years.
And Atul can start partying at 6 in the morning. So he's the right guy to call on the party anniversary celebration.
I thought he was now more into like fitness, meditation.
I was always into that. It's just that I'm one of those early risers, So mornings are like, I'm a morning person. I just love mornings. Yeah.
There's a party in the market.
Huh?
Where's the party in the market?
Yeah, if you're in crude. So yeah, I know it's been extremely painful. I think it's been extremely painful, and it's not just India. Yeah, in fact, India the fall has been much lesser. You look at global markets. Look at S&P 500. Yeah, it's 25% off. Nasdaq 35% off, and these are indexes which are really hiding what is below. You will find that we may say that our portfolio is down 18%, but stocks, most people's portfolios are down a lot.
You're down just 18%.
Sorry?
You're down 18%.
No, I'm saying the index is down 18%.
Index.
But the fact is that, that's the way indexes are composed, that's the way it is. So the pain is there, but you have to understand the headwinds, right? You had once in a 100-year kind of pandemic.
Yeah.
You hardly came out of it. You have a war, once in 75-year European war, and now you have once in a 40-year inflation. So, these are like some very big numbers, and these are bound to happen. But one thing COVID has taught me that human beings have the ability to recover.
Yeah.
So, I know, the resilience is there. These are man-made problems. Human beings will solve it. Yes, where and when, that's a different story. But in all the pessimism, I personally think that there may be a little more pain, but it's not end of the road. And I feel that India specifically, very often, as I keep saying, that stocks that fall less in falling markets are leaders of the next bull market. So what I really see happening is that India would actually emerge as one of the most preferred equity markets globally. In fact, I think our standing in the whole pecking order will change post the recovery. It will be one of the fastest.
I used to think like this, but when I see the FI selling, it just makes me wonder that are we different?
No, I'll tell you, let me just explain. We all, this whole FI selling. Yeah. So the MSCI emerging market, I have the view that most flows to India come as a subset of being in the emerging market basket.
Yeah.
Okay. The MSCI emerging market index topped out in Feb of 2021, around 1445. It's around 1,000. So EMs have topped out in Feb of 21.
But we continued.
If you go and see FI flows, when did they turn negative? They turned negative from March, April 21.
Yeah.
March, April 21. Yes.
Exactly. So the fact is that the selling is not that you're singling out India to sell.
Yeah, of course.
You are selling because the basket is getting sold. And the basket has its problem. Look at China. You got Russia part of it. All these countries, whether it's Sri Lanka or Pakistan, which are all. So these are all areas that have a problem. The emerging EMI index is down 30%.
So Atul, the question is that we are in a bear market. You fall 20%, you technically are in a bear market.
Yeah, those are numbers which anybody likes to give.
The bear market, the minute you use the word bear market, it could be a long, prolonged cycle of either pain or downward returns.
Right.
So is this beginning of a bear market? There are commentators who are using comparisons like, after 10 years of bull market, you will be in a long bear market. We've not seen a bear market. Are we in for that kind of a
negative
setup?
News always sells.
Are we in that setup?
No, I don't think so. What I do feel is that, yes, after yesterday's fall and sell-off, I do feel that we have a little more to slip. If 4-5% is something what I really think. I think 14.5 on the Nifty is what a level I would give it to. Of course, I've drawn some channels and there are reasons for this study. It's not a number I've pulled out. So that's about 5 to 6%, fair enough, but we moved 3% yesterday, intraday. Yeah. So it's not something massive. But what I feel is that the market would then consolidate for some period of time. The reason is that for the last decade, we always had V-shaped corrections because whenever the markets fell...
V-shaped recoveries pretty much.
Yeah, and recoveries because whenever the markets corrected, the Fed stepped in. This time the Fed is not stepping in. So what will happen is the market will have to spend some time. I am really not scared in terms of time because what will happen is that even if markets spend time, Nikunj, quality or outperformance will be visible. Stocks will still make 52-week highs. as of this morning, yesterday morning, also stocks are making 52-week highs. So there will be some segments of the market that will do well. And in the larger context, what I see is that even if global markets go into a longish period of consolidation, India will be one of those stocks that will hit 52-week highs first. As I said earlier, that what I feel will change post this correction is the pecking order. India will move many notches higher in this whole emerging market basket. Yes, when the flows change, that's a very big macro scene. But in that, I think our allocations will go up substantially.
But the only one tricky thing is crude, Atul, and that impacts our lives. I mean, not just our lives, but the country and economy and equity markets. That's just not falling down.
Absolutely. I mean,
is there anything on the charts that makes you feel that we can
I mean, really every morning the first thing I look at, it's crude and there's disappointment.
Yeah.
Right? Because at 120 plus or minus $2, it's just stuck there. And honestly, if you ask me, that is a true sign of a bull market.
Yeah.
That is the true. What is a bull market? Bull market is that even for whatever news that comes, that thing does not correct. And if it corrects $2, in a jiffy it pulls back. So crude essentially is definitely the center of the problem. Of course, because it concerns all of us, one needs to look deeper. It's not my area of expertise, but I think that the world has got crude totally wrong. And that is in terms of the geopolitical leadership. I mean, we went out and banned one of the largest exporters of energy, that is Russia, without understanding where were the alternatives. And wherever the alternatives were, we have not been able to pressurize them to increase output, which is OPEC. So I think that that we are hurting ourselves a lot more, and the world is realizing it. If you start seeing the commentary among leaders, etc., they feel the need that actually this is not really hurting Russia. I mean, if you see unbiased reporting, life is not so bad. Putin is not at risk. Their economy is not suffering.
People are still going to Moscow and holidaying. And
absolutely. So what is expected that this is going to really, upset and create a regime change and all? That is no way happening.
But tell me, is it fair and logical to draw any correlation between crude and, say, the Nifty or the MSCI Emerging Market Index?
No, I really cannot draw. I'll tell you, like, I look at commodities as a whole, okay? So crude definitely, because it's not fallen. You look at metals. Now you look at globally metal, look at copper. Copper is corrected 20-25%. Yeah. You look at commodity stocks in India. You look at the metal stocks. Boss, they're off 50%. Hindalco is off 50%. Tisco.
Oh, it's 50% down.
Yes, from the recent high. Yeah. You look at Tisco. You look at SAIL.
1,500 must have come to 1,000. Yeah. So Atul, my question is, this is where this debate of technical versus fundamental comes in. You are a trend follower. You would say, I will not buy weakness because the trend is against me.
Absolutely.
The fundamental expert would say, look, I'm going to buy something which has fallen the most because that's getting cheap. How do you differentiate now?
It's a total mindset game. It's a total mindset game. It comes very deep from your personality. It's actually a personality trait, right? It's not about fundamental technicals. It's how we view things, how we view life. I am one of those guys who buys strength.
So the strength is not there in metals, strength is not there in IT, strength is there in banks. So you're buying banks?
And no, banks also are not strong. Autos. Banks are not strong. Relatively. There is a perception that banks are strong. What is strong is autos. Okay. What is strong is public sector undertakings.
Which one?
I would look at the defense stocks.
Okay.
So you will find that there are these pockets, there are niches. I mean, I run a PMS, so disclaimer, I have a vested interest. Like, I'll tell you, look at bearings. Again, a very niche play. There are only 4-5. They're touching lifetime highs. So what you will notice is that even in these points of pain, there are some FMCG stocks touching lifetime highs.
Yes, so they are.
So what I'm trying to tell you is that I am one of those guys who buys strength.
Would you buy FMCG then? Because the strength is there.
There is 1 or 2 stocks out there. Okay. And there is, in fact, I added one very recently.
Ex-ITC, right? Because that's a discovered story.
Yeah, that's a different story. Yeah. But there are, so what I mean to say is that even if markets, see, when markets fall, like how they did yesterday, nothing will hold. But even if markets stabilize, I see a lot of stocks continuing its march up ahead. And I think that there will be opportunities thereabouts. When the pullback comes, nobody knows.
Is it time to go all in, like we use in poker? Time to go all in?
I would think around 14,500 or so. Personally, that's
so 14,500. If market goes to 14,500, you should increase your allocation, reduce your cash. You may go much more below 14,500, but
you can. But I do think that should be an area. Value and zone. The market
don't go short now. Too late for that.
I would think so. Selling and shorting, because very often when markets fall like this, the pullback also, as I said, I know it's not Fed induced, but there are what you call short covering rallies, and short covering rallies tend to be fast. I don't think this is a great risk reward ratio in terms of selling or short selling.
And if you're sitting on cash, put it to work closer to 14,500, but don't raise more cash.
I would not think so. I would not say that these are levels to raise cash. These would be levels to deploy. And I feel that if someone has even a 1 year time horizon, I'm not talking about 3 years and 5 years, even in a 1 year time horizon, I think you will come away with handsome returns.
On a 14th anniversary.
For a overall market recovery, banks will have to perform. They haven't. They have also corrected in this recent fall. When will that tide change?
So, Aisha, I've been hearing this bank's argument. It's a consensus bullish trade.
Yeah.
Right? But the problem with banks is that it's fairly overowned also. So for all the point, post-COVID, you realize that the bank Nifty or banking as such has been a relative underperformer. So I know it doesn't sound perfect. I know that there are fundamental reasons why what I'm saying may not be great, but I don't think banks will outperform. At the end of the day, as an investor, what I'm looking at relative outperformance. I'm finding relative outperformance in some very, very, very different. For the last 3, 4, 5 years, we were in a very narrow space of the market, very high quality, expensive stocks. The market is saying something else. Like I spoke about some sectors. Repeat, I have a vested interest. It's defense stocks, it's bearing stocks, some FMCG plays, some engineering infra plays, some
Capex
auto space.
is becoming the central theme.
Right? And everyone is underowned. Yeah. Nobody has that in their portfolio. So what I like to see is, you may say that I look at trends, etc. But also there are some unloved trends.
Contra plays.
Absolutely. And these are not really contra because the stocks are doing something else.
Yes.
But the fact is that our mind is so fixated on certain themes which were winners of the last bull market. Yeah. Our bias is the last winner. Our bias is the previous high. But the fact is that every bull market will throw up new leaderships. And I feel, or what I am seeing, is that a new bull market will emerge post this. It will not be the vertical move. It may be a little more sideways and little more elongated, but a lot of sectors and themes will do well. And interestingly, these sectors and themes will not be those that did well, which we are used to and where there is consensus. There are some very small niches that are emerging and I find them very, very exciting.
Bet on new horses. Okay, so 14,500 on the downside. What could be the upside?
No, I feel that, the market has come down in 3 legs. It's not, this fall since October was not a one-shot kind of market. And things, and I personally think that the whole geopolitical thing, which is a Russia thing, it was not there in October when we topped out. That time what we were talking about was supply chain issues, right? On top of that, you put this whole Ukraine war. What was the first call? A 3-week war. Yeah. Russia will run through them. Now it's a 3-month war. And now you hear 3-year war. So the fact is the world is moving. And you and I, and in fact nobody, has that skill set to know when these things are going to end. They are very, very dynamic. And that is what the market is reflecting. But I personally think that this whole sanctions thing, especially in the area of crude that you mentioned, which is the pain point, the world is coming to realization that actually it's hurting us more. Look what's happening to Sri Lanka. Look what's happening to Pakistan. Because these are countries which are getting knocked off for a thing where they don't even share a border. They don't even know where they are on the map. Yeah. So the fact is that the world is realizing, and once this inflation, once people come on these Western countries, they have very big balance sheets. They can take pain longer. But at some point in time, they are going to feel the pain. When those politicians have political compunctions, when they lose elections, you will realize that they will say, okay, listen, we need to talk, we need to sort this out. And it is man-made, and human beings will solve it.
And you didn't answer my question, level-wise.
14,
That's on the downside, upside.
Oh, I think that there was a recent high, if I'm not mistaken, of, I think 16.7 or thereabouts. From there, we tanked off. So I feel that till that is not, that's I think 8-9% higher. But then we were 3% yesterday. So nowadays we fall and come up. I think that's the last higher top, which is important. Yeah.
Well, appreciate your time. So glad you could join us.
Thanks a lot.
Thank you for joining us.
So nice having you in the studios.
Same here. Let's catch up.